Hi, welcome to a special market update. We're going to focus on the S&P because it's a much broader based index than the Dow, although the news for whatever reason likes talking about the Dow. So here we have a daily chart, and notice it looks like a really steep decline that we've had since this bearish engulfing pattern back in mid-May. But let's put things in perspective here. So I'm going to look at a weekly chart, and you can see since the rally began, let's say over here, late 2012, this has really been, I would say, a normal type of correction. And I'm actually still longer term bullish as long as key support, and I'll show you what that is on we have to go to a monthly chart here and make some resistance lines. So I'm just going to draw some horizontal lines here. So we have one here. I'm essentially connecting the high here. And I'm going to draw another one, and then this is going back to the highs in 2000, and a line over here. So essentially taking in the resistance over here, and the resistance over here and over here. And what I'm looking for is this old resistance band between, now remember this is a monthly chart, between I'd say around 1530 to around the 1580 area to become support. So right now we're in that support band, old resistance becomes support, and what I'm looking at is this is a huge trading range. So we still have a lot of, I think, upside potential because of the height of this range. In theory, you take the height of the trading range, and let's say between 750 and 1575, so you're looking at, give or take 700, 800 points, something like that, and you add it on to 1500, you have an upside target of over 2000. But there's always a price that says we're wrong. So what I'd be looking at, let me go to a daily chart, back to a daily chart. And these are the lines that we drew on the monthly chart. And interestingly, look how that bottom line held the lows here back in March. So yes, we've had a sell-off, but in the broader perspective, I'm still longer term bullish. What changes my mind? On a monthly close, I would say under the 1525 area, but let's give it a little bit of leeway because, we're looking for so much on the upside, like, over 2000. So at a minimum, I'd say a monthly close under 1525 would turn me neutral, monthly close. And since it's almost the end of June, we're not far from a monthly close. And under 1475 would actually turn me bearish. But right now, although the short-term trend is down, I think we're at a support area, and the price that says I'm wrong about long-term bullish outlook on the S&P would be a monthly close under 1525. And if you want a little extra confirmation about being bearish, it would be under the 1475. But to me, a monthly close under 1525 would have damage this market from a long-term perspective.